let's go get ahead and get started. Thank you everybody for joining us. We are Finance Magnates, and I'm joined by some fantastic thought leaders in the industry today. Two of our panelists are joining us via audio only, so I just want to let you know that you'll be hearing the sweet disembodied voices of David Gerard and Zach Prince, in addition to the beautiful faces of Marc, Bhargava, and Joe Lallouz. But so welcome to this webinar this Monday. My name is Rachel McIntosh, and I'm a cryptocurrency journalist and podcast host at Finance Magnates, and I will be the moderator of this panel. I'm so excited to have here with me today some of the industry's leading thought leaders and experts. I'm going to let them introduce themselves in a moment, but just briefly, we have David Gerard, who's a cryptocurrency journalist and author of Attack of the 50-Foot Blockchain, Zach Prince, who's the founder and CEO of BlockFi, Marc Bhargava, co-founder and president of Tagomi, and Joe Lallouz, who is the CEO of Bison Trails. So as you probably already know, our discussion today is going to focus around the impact of COVID-19 on the cryptocurrency industry. The coronavirus has affected all of us. Every aspect of our lives has been changed, and it's had a very strange effect on time. So certain aspects of our lives have been sort of sped up, and others have slowed down. And in many ways, the same thing can kind of be said for the cryptocurrency industry. The coronavirus crisis has been kind of like a stress test for the industry on many different levels. And as a result, we've seen crazy things. We've seen wild volatility, some infrastructural issues, and generally the vulnerabilities of the crypto ecosystem have really been laid bare. On the other hand, there's also been sort of inspiration. This has also been a catalyst for growth and innovation and new kinds of thinking, and an opportunity to really rethink the entire world as well as how cryptocurrency fits into it as we move forward. So before we get into our discussion, I want to take care of a couple of housekeeping things. So first of all, here's our agenda for today. So for the next 40 minutes or so, our discussion is going to focus on whether COVID-19 has been more of a threat or an opportunity for the cryptocurrency industry, whether coronavirus will increase the use cases of cryptocurrencies and blockchain technology, and what kinds of new jobs and opportunities will be created in the fintech industry as a result of the coronavirus. After that 40 minutes, the floor will be opened up for questions. So we would absolutely love to hear from all of you during today's presentation. If you have a question for our speakers at any point during this webinar, please feel free to send it through the question tab at the bottom of your player window. We'll be answering questions at the end of this session, and if we don't get to your question during today's webinar, we'll be sure to follow up afterwards. So a quick FYI, the webinar will be available on demand after this live session is over. If you miss anything, don't worry, we'll be sending around the on-demand recording when it's available. And there you can find today's panel as well as some other related content, including blog posts and information about upcoming webinars. And last but not least, sharing is caring. So we'd like to encourage you to share today's webinar throughout your social networks. So without any further ado, let's get this conversation rolling. And Marc, I want to ask you to introduce yourself first.
Sure. Hi, I'm Marc. I'm one of the co-founders of Tagomi. We're a electronic prime brokerage, so we help larger macro funds, hedge funds, VC funds, and others place larger trades and do things like shorting and trading on margin and more complex sorts of trades.
Okay, great. And Joe, can you give yourself a quick intro?
Is my mic working now?
Okay. Yeah. Yes, it is. Thank you.
Great. Hi, I'm Joe Lallouz. I'm the CEO and co-founder of Bison Trails, and we're an infrastructure as a service company in the blockchain space. We help large-scale custodians, exchanges, asset managers, funds participate in existing, new, and upcoming new blockchains.
Okay, fabulous. And Zach, can you introduce yourself? We'd love to hear your voice.
Yeah, hey everybody. Sorry I couldn't join via video. I'm Zach Prince, the CEO of BlockFi. We are a financial services provider in the cryptocurrency ecosystem. So we offer the ability for folks to earn interest on digital dollars or stable coins, and also on some of the top cryptocurrencies like Bitcoin and Ether. We were the first company in the space to offer fiat loans secured by cryptocurrency as collateral. And we also have a fee-free trading product that's all available currently via our website, and in the next week or so, also via our mobile app.
Excellent. And last but not least, David, can you introduce yourself?
Hello, I'm the author of the book Attack of the 50-Foot Blockchain, which was a massively skeptical book about cryptocurrency. It came out in 2017, just as the bubble was going. This has somehow turned into a part-time gig as a crypto journalist. So I have a blog of the same name, and I write for various outlets and monitor the space.
Okay, thank you all. So just as we were saying earlier, the coronavirus really has impacted just about every aspect of this industry from top to bottom. Everything from day-to-day business operations to advertising to prices to trading. So I want to encourage everyone to answer this question, but I'll start with shooting this at you, David. What's something that you've learned about the cryptocurrency industry, or rather something that you feel has sort of been revealed about cryptocurrency as a direct result of the coronavirus and the economic fallout that has ensued?
So the thing about the COVID-19 crisis is that it really revealed that this was the end of the long bull run from after the 2008 crisis. Once that started recovering, we basically had a decade where stocks just went up. That ended all of a sudden in one big bang. And what happened was everybody took all their money out of everything else and put it into the asset of last resort in a crisis. And that asset turned out to be dollars. Buying up treasuries or just getting cash. Markets in conventional things completely just went nuts. Nobody knows what anything is worth anymore. Stock prices make no sense at the moment. So what happened was crypto crashed as well, because the great difficulty that crypto continues to have is that there isn't really a crypto economy. There's no circular flow of income. No one lives their lives in crypto. As an investment, it's functionally a bit of a dollar derivative. So people poured out of what the few investors there were in crypto compared to the rest of the investment space, poured out of crypto and the price crashed. It's been pumped back up, but people are flying away to secure assets, and the secure asset they're flying to is dollars. So everything is feeling the hit. So the lesson there is everything that crypto did, it did during the best possible conditions when markets were going up, investments were all looking good. You can invest in index funds, and that was great. And now it's the bad times, and crypto really has to make a case, and I'm not seeing it make one. So that's what I think the situation is at the moment.
Anybody else want to jump in?
Yeah, sure.
Okay,
I'll jump in.
Okay, yeah, great. Go for it.
Hey, David. So I think you brought up a really interesting point about the flight to dollars. That was very accurate. And one of the things that I'll talk about throughout this webinar is an angle that I've been touching on for the cryptocurrency space for quite a while that other folks haven't necessarily always agreed with me on, which is that dollars is going to be the biggest thing moving around the crypto economy or the crypto ecosystem sometime over the next, call it 1 to 5 years. And historically, it's been a kind of a challenge for some folks in the industry to square that as a concept, because a lot of the most hardcore cryptocurrency believers will say things like, oh, you know, Bitcoin's going to replace the dollar and fiat currencies are total trash. And I believe the exact opposite. I think there's like a great sucking sound in the world economy, and it's the dollar sucking the life out of everything else. But what's unique about cryptocurrency, and specifically the payment rails that are created by some of these networks like Ethereum, is that it enables people to move dollars around at a speed and scale that simply was not possible using the traditional banking ecosystem. So you're starting to see things now where payments and remittance type use cases are emerging. Savings use cases like what we do at BlockFi are emerging. And these are all happening with what the crypto industry refers to as stable coins, but they're basically just digital representations of dollars. And so you're going to see more and more people do things that they used to either do more expensively with the traditional banking system or not be able to do it all with the traditional banking system, move into the crypto world. They're going to get one step closer to Bitcoin. And I would actually take the other side of the Bitcoin argument as well. I think prior to March 12th, which is like the crypto Black Thursday, 50% single day drop in Bitcoin prices, we were around 9,000. And today Bitcoin's back around 9,000. So we've rebounded better than the stock market, performed better than gold this year. And I also think that story is going to get out a little bit, and there might be a big benefit to Bitcoin for not being as connected to the traditional system as other assets are as we enter this period of time. That's going to make a lot of people reevaluate their investments, going to make a lot of people, reevaluate their understanding of the economy. So I think it's an incredibly bullish time for cryptocurrency right now. And we haven't even talked about the halving, which happens in a week, which we should talk about at some point as well.
Yeah, absolutely. And Mark, I see you nodding your head a lot. So maybe you can add a little bit about the halving. And
well, I think to David's earlier point, I think there's a very, very large chance that he's right, to be honest. But I also think that any sort of paradigm shift just takes a lot longer. And to sort of draw a conclusion, even on a year of data, even on 10 years of data, the decade crypto has been around, is a little bit ridiculous, because you have to think about it more as like, is this a paradigm shift that will happen? And it hasn't happened yet. That's absolutely true. We have a lot of really large clients on our platform that probably less than 0.1% of their assets are in crypto, and they're just sort of playing around, and they're hyper skeptical, and but they're here and they're looking at it. And so I think it's just a question of, there's certainly a minority chance that this paradigm shift actually happens in crypto. So I think all the naysayers are people who say, hey, look, in this one instance, X or Y didn't happen, therefore it's kind of discussion closed. I think most of them are, probabilistically right. That a lot of the ecosystem doesn't develop. Crypto is never a store of value. Bitcoin isn't a store of value. I think that's sort of the default you should go with. But okay, so why am I in this industry? Why are so many people on this call working on it? Is because paradigm shifts are really long and they're really hard, and there's a very small probability that they work. But when they do work, it massively changes the way systems work, and it takes a really long time for that to happen. That being said, what would I consider to be a paradigm shift, or how? I think it wouldn't be, even if 5% of the money that fled to dollars in the future ends up fleeing to Bitcoin. And you see something like that with gold as well, right? Like by far the asset of last reserve is dollars. It's easy to flee to, et cetera. But you can also see, some percent of that might flee to gold or precious silvers or artwork or other stores of value. So I think the question is less Bitcoin versus the dollar. And it's more really, in my mind, does Bitcoin even enter the equation? Is it even one of the things that you flee to? And even if that's a 1% or 2% or 5%, that's drastically different, because it's saying that there's now a new paradigm for something that's not attached to any monetary policy, something that's not attached to any government, that is now in that basket. And it's a digital good that's now in that basket. And that's like a huge mind shift and a huge paradigm shift. And so I think it's just far too early, and specific to trying to test it in a week or 2 weeks and look at stock prices or dollars. We haven't seen the effects of fiscal stimulus. We haven't seen the effects of monetary policy. We haven't seen, how has Bitcoin performed versus other currencies besides the dollars in other places. Zach was talking about stable coins and dollar-backed coins. Their use cases are mainly in Southeast Asia, and to kind of look at how stable coins are used just here in the US with this US-centric mind frame where it's easy to get bank accounts, it's easy to use Venmo. It's not where the use case is. So I think you're seeing a global paradigm shift potentially. It's very, very easy to be skeptical of that. And it's very, very hard to actually kind of find the use cases and change mindsets and change paradigms. And that's something that we're not going to answer on this video call. We might not even answer in 5 years. We may not answer in 10 years, but it's one of those things that takes a long time. And happy to point to what I think are some interesting parts of the industry. But I think making any diagnosis on COVID-related movements and prices or dollars or stocks or Bitcoin is like good journalism, and it's fun to talk about, but we won't get our answers today.
yeah, absolutely. So Joe, you're somebody who's really coming at this from the infrastructural side of things. And what do you think about this idea of this concept of a paradigm shift and how it relates to things that are happening right now in this moment?
Yeah, I think I largely agree with Marc and with Zach. on this idea that this takes a long time. We are seeing some shifts. No one really made the promise that Bitcoin was completely or crypto was completely uncorrelated from the markets. I think really like the most claims that we do here is that it's an anti-inflationary asset, which takes some time to see that play out anyways, right? Like we have not seen the effects of COVID in the economy yet. Like even if you look at traditional markets, I think the S&P is down like 12% on the year, which is the economy is doing astronomically well considering the entire world halted, a couple months ago for the last few months. I think we're still at the beginning of the issues that we're going to see from this. So with all that being said, the best time to build to lay the groundwork for the fundamentals and to build the infrastructure to support a paradigm shift is when it's still early. You have that opportunity to put down the rails and build the train before it's going 200 miles an hour and can fly off the tracks. And so this is a very exciting time for us. If you look historically at other technology shifts and major technology advancements, there's some incredible infrastructure companies that were built in those shifts, early on in those shifts, and they were all in very serious downturn markets. So whether you're talking about like computing infrastructure, or you're talking about trading infrastructure, or you're talking about financial services infrastructure, Marc and Zach and us at Bison Trails, we're all trying to solve the same problem, which is like, how do we lay the groundwork for this massive shift? And I think I want to highlight one of the things Marc said, which is we don't know if this will happen. We are all working hard to make it possible to happen, and we're all planning that if it does happen, we're ready to scale with the market as it does happen. And so, we take a different approach. We're largely a technology-based company as opposed to a services-based company. But there's no better time to build technology than in a downturn market, and we're super pumped. We're excited by it. I'd also note that a lot of folks have asked me like, what do you think about crypto in the last couple of months? and I'm kind of like, 20% daily swing. That's that's a Tuesday in crypto. Like no one's really concerned. Sure, okay, one day 50%, or there's been a couple of hacks that's been pretty bad. But this is all experimental anyways. We're all still in the really early days. There's barely any people that use crypto in the grand scheme of investors, in the grand scheme of money. And so none of this has caused any panic for us or for, I believe, the folks that are really deep in the space that are building impactful businesses.
Right, and so that's a great, thank you. That's a great segue into my next question. Kind of bringing things from this big long-term paradigm shift view back down to this present moment. So, speaking of infrastructure, there have been quite a few notable infrastructural issues that have been specifically associated with market movements that have come about as a result of that virus. So all this volatility that's suddenly in the space is causing huge amounts of traders to use cryptocurrency exchanges and various platforms to make movements in the market, and it hasn't always gone super well, let's say. So Marc, I want to start with you on this question. Can you talk a little bit about what we've learned as a result of the volatility and the trading that's come as a result of the coronavirus?
Yeah, sure. So at Tagomi, we help larger traders place trades, and so we route to 10 exchanges and 4 market makers that also stream two-sided quotes to us. So we're really helping take larger orders, split them into pieces, route them to wherever the price is best, and most importantly, minimize market impact by spreading it across exchanges and market makers. So kind of a traditional brokerage. I think an important insight is that many of the most prominent exchanges, that were started between 8 and 5 years ago, very much had a focus on retail and, are now starting to accumulate more tech debt and things like that. So I think, it's definitely a very different experience that a Wall Street trader might have working with a crypto exchange versus, how they normally access markets. And so, I think there's been a big improvement since 2017 across many of the exchanges. They're more robust, they're stronger, they've had more time to sort of build. But at the same point, I think using a platform like Tagomi that can kind of, if one exchange is down, we just route to the next best price if they had the best price. And so I think definitely the tools are starting to be there. Obviously, other people on the call are also helping with that. Increasingly you can get returns from staking, which is a really important part now as well. It's not just thinking about what to buy and sell, but how to hold, how to stake, how to use custody. And of course, giving these sort of tools to retail, like what BlockFi is doing, is also, I think, honestly, where the largest demand is, as it continues to be more of a retail-driven market. So I think, the infrastructure is really growing. It's much better than 2017, but certainly, at least for the most advanced traders, it'll feel very different than their experience, moving large sums of money on Wall Street. And that is one of the things we're working on trying to change.
Right. Yeah. So Zach, speaking of BlockFi, can you talk a little bit about, sort of the role that staking is maybe increasingly playing, in this space?
Sure. I mean, staking is still a very new, from BlockFi's perspective, it's a very new and still a somewhat nascent part of the cryptocurrency ecosystem. So I don't know off the top of my head, I'm sure Joe does, but if you go down by, the market cap rankings, I think there might be, one or two in the top 10 crypto assets that support staking, and I don't think either one of them is in the top 5, and that's in a top 10 that's still like 85% dominated by Bitcoin or something like that. So we, at BlockFi have regularly looked at it. We're regularly surveying our clients and saying, how important is this to you? I think that the position that companies like Bison Trails are in is going to be a critically important position as more and more companies need to integrate staking and like have zero intention of doing it themselves, which is definitely BlockFi's position. But I don't think relative to the size of the market and other things that go on, it's necessarily having a big impact today.
Right. David, so from your perspective as somebody who is working as a journalist in the space, where do you think that we need to improve infrastructurally as an industry?
So the big problem is fiat gateways. Like, as I said, there's no crypto economy. So ultimately, it's a whole bunch of people killing each other over pennies in a zero-sum trading environment. It's not something that can grow. The big problem for crypto is, as I said, that basically crypto is a dollar derivative these days. You invest because you want to get dollars. And you can do that, but ultimately, it's a zero-sum trading environment where you have winners and losers. It can't expand without performing more functions out there in the world. That's always going to be a problem. I mean, the big hope for crypto fans over the last 3 years has been, can we get another bubble? Can we get the public back in on it? And I really don't think that's going to happen anytime soon. The price has been going up and down like a yo-yo for since November 2018, which was definitely when the bubble finally had finished popping. But those price numbers are sort of weirdly without the actual general public retail interest. So I think that the big problem for crypto is that you can come up with ever more elaborate ways of beating your fellow traders inside the crypto sandbox, but how do you get more interaction with the outside economy, which is so much larger? I really don't see that being addressed in any meaningful way before COVID-19, let alone during or after. I should say, by the way, anyone who thinks they can predict what the Bitcoin market or the crypto market in general is going to do 6 months or a year from now, no one can predict any market. No one can predict anything. Nobody knows what is going to happen tomorrow. Weeks take years.
I love that. Weeks take years. Yeah.
Anyone who claims to know what's going to happen, I don't know, like even just predicting stock markets, you can't pick winners amongst companies, except, Zoom will probably do quite well, that sort of thing. But the best you can do is that predict things on a sort of industry basis, like what sort of industries will make it, because you can't even pick particular players, you know. It's nobody knows anything, and I'd like more people to admit that.
Okay, so, but indeed, if we know, if the weeks take years, as you said, and you know, we can't. You're absolutely right. We really can't predict the future, but you know, perhaps it's true that we can learn. You know, especially given all of this coronavirus stress test, so to speak. Excuse me, that it's
Quite a
taking
stress
place.
test.
Quite a stress test, exactly, in many ways. That has taken place, like, you know, over the past 2 months. You know, we've learned a lot also about sort of the psychology of investors, you know, and how people think about cryptocurrency, particularly perhaps institutional investors. So Zach, I want to throw this question at you. What do you think that the trading behaviors of investors in the wake of the coronavirus crisis have revealed about the ways that investors and traders engage with and perceive Bitcoin and other cryptocurrency assets?
Yeah, so I would say it hasn't changed that much. I mean, you can make an argument that every time Bitcoin lives or cryptocurrency lives through a wild market event, that it's that much stronger. I can say just from conversations that we have at BlockFi, we saw actually really smart trading activity from our retail clients who were enthusiastically buying as the prices went down. So that was a positive trend. And I also think that there are certain types of institutional investors, specifically the ones we interact with the most are proprietary trading firms and kind of like long short, either hedge funds or macro trading firms. And they've all had a heyday with the volatility. So the market makers, there were some fundamental kind of like infrastructure challenges on March 12th, especially in the evening for the cryptocurrency markets. Liquidity effectively evaporated. Some of the biggest venues for liquidity like BitMEX and OKX had to, either flip the off switch or they were attacked and had to go down for a period of time. What that did was it created really big dislocations in terms of prices on the different venues, which is how market makers, make money. In traditional public equities, they might be making money off of a penny or half a penny difference in share prices on the Nasdaq stock exchange. In the crypto world, they're making money off of 5, 10, sometimes 20% differences in the prices that they're seeing across different trading venues, and that was certainly the case after March 12th. And then the more macro traders, they've latched on to the story that Bitcoin is a version of digital gold for a long time. And so in periods of macroeconomic uncertainty, things like gold have acted as a safe haven. Bitcoin, in a lot of folks' eyes, in the macro trading world, is somewhat a newer digital version of gold that should start to trade a little bit like gold. So they saw the price dip. A lot of them bought it and were riding it long as we came out of the March 12th volatility. But one thing I'll also mention, just in terms of predicting the future and nobody knows what's going to happen, is there's this really interesting stat that I just found out about Bitcoin, and I posted it on my Twitter. I don't know if anyone's ever seen those charts where it's like the different asset classes color coded and ranked by performance every year. Big investment banks put this out every time, and it'll be like, in 2011, REITs perform the best, and then tech stocks, and then bonds, and they kind of rank them. If you add Bitcoin to that chart, it's been the best performing asset for 8 of the last 10 individual years when compared against every other asset, gold, equities, everything. So obviously past performance isn't indicative of future results, but this is something that quantifiably has kicked everything else's butt in terms of investment performance. And so the question I ask folks is like, how much volatility can you stomach for the definitively incredible returns that this asset class has offered folks over the last decade?
Great point, Zach. And yeah, and I also want to mention, this idea of Bitcoin as a safe haven, which has been this really prevalent idea, especially before the coronavirus hit, and everyone was like, Bitcoin is really going to have its heyday when there's some kind of global crisis, and then everybody's going to buy Bitcoin. But that wasn't exactly what we saw happen. Clearly, as we mentioned earlier throughout this whole conversation, Bitcoin has, basically recovered to where it was pre-coronavirus, but during the coronavirus, really, really tanked. So, but given Zach's points, also about the fact that Bitcoin has been such a high-performing asset over 8 of the last 10 years, Joe, is Bitcoin still a safe haven, or was it a safe haven? Is that even the right way to have described it in the first place?
So I'm speaking from a long-term Bitcoin enthusiast as well as holder. I've been involved in the Bitcoin and crypto space for quite a while, including activities like mining and buying in the earliest days of Bitcoin. I think to Zach's point, I think there is a story there that Bitcoin is digital gold, that is a safe haven, or that it will become one. I think is maybe the sort of more speculative version of that story, and I think that all still holds true. I think that anyone who's been making promises that Bitcoin is completely uncorrelated from the rest of the markets what we saw over the last couple of months is wrong, has been wrong. However, I think that the story is still potentially true in the future, and this is kind of what I was getting at previously, that you have to ask yourself the question, why would Bitcoin be a safe haven, and why would Bitcoin actually be able to decouple from the markets? And that really comes down to how Bitcoin is affected by fiat inflationary and monetary policy measures. One, we still haven't really seen the effects of the current monetary policy that strongly. And two, the reality is that Bitcoin is still a relatively young asset class, and still needs some time to continue to develop. I know 10 years feels like a long time, but when it comes to store of value assets, it's actually not that long. And so do I think Bitcoin is a safe haven today? No, it doesn't really act like a safe haven today. So it'd be hard to say that it is. Do I think it can and will be? I think it's proven that it has very, very strong store of value properties, and that it very well could be. And so, yeah, I'm a believer in that. And, I certainly wasn't one of those people that was fleeing Bitcoin or crypto into USD. And in any way that I was, it was into probably crypto stablecoins.
Okay, Marc, I see you nodding your head again. So do you have anything to add?
Well, yeah, I agree with Joe. I mean, if you look, I think between February and March, stablecoin inflows were up 50 to 70%, sort of how you look at it. So I think it's exciting that, one of the use cases of the crypto economy is kind of what David said. It might sound small, but being a derivative of the dollar is very, very powerful in other parts of the world where it's actually not that easy to accumulate dollars or to send money back and forth. You see that a lot in Southeast Asia, people in Hong Kong and Singapore sending money back to Indonesia or the Philippines. You see people in China having a very difficult time getting any sort of access to dollars because of capital controls or access to US equities or other, cash flow producing assets. So one of the use cases that we saw over COVID was certainly this increased inflow into stablecoins, which is actually a pretty powerful use case in a lot of the world, less so here in the US. And then, of course, the use case of greater store of value and Bitcoin being that is one that, it has to be gradual. So at the beginning, when Bitcoin prices were tanking, a lot of that was people who had been trading on margin, getting margin called in other assets. And then it became a self-fulfilling prophecy. As Bitcoin dropped, they started getting margin called in Bitcoin and crypto holdings that they had as well. So in the short run, liquidity might be more of an answer than the fundamental value of some of these assets. And the longer run hasn't happened yet. And we're kind of waiting on how, like Joe mentioned, fiscal policy, monetary policy, how all of this will play out. And I also think that it's important to think about, financial speculation is clearly a lot of what's going on here. To a degree, store of value is, to a degree, payments are, the latter two being more interesting. But there's also very early, but innovation happening too in the fields of smart contracts and other places. And I think a lot of the skepticism is very fair. If you looked at, I was on the investing side before Tagomi. So in 2016 and 2017, I was doing venture investing and investing in some of the assets. And if you were to take a snapshot of my conversations in 2016 and 2017, almost 90% of what everyone was promising me has not come true. And now we're sitting here in 2020, and a lot of what people had promised, many of the projects I haven't heard from, a lot of what people were promising was really unfair, and it was kind of very much over-promising the technical capabilities. That doesn't mean necessarily that some of the initial premises around, where smart contracts can be used, how they can be used, for private browsing on a browser like Brave, or using DeFi, or all these different things are just very, very early. But from a technical perspective, are making progress. But I do think there's a big mismatch between the amount of progress they're making versus what people would have told you in 2016 and 17. And I think that adds a lot of fuel to the skeptics who say, just shut down this whole industry. It was something that didn't work. But the smarter people in the space, I mean, if you look at kind of Sequoia's backing of Paradigm's fund, or Yale's endowment's backing of Paradigm, or the ramp up of a new Andreessen fund, we work with many great venture capital funds in the space. It's pretty well known. Founders Fund is a client of ours. A lot of the smartest people who are patient and have this patient capital have seen these trends, have seen paradigm shifts before, understand how early the tech is, but also understand the rate of progress and benchmark that against other rates of progress. Some very intelligent folks are spending a lot of time on this, and I always find those the most interesting places to work and spend my time as well.
That's fabulous, Marc. And yeah, I think that, there is sort of this pressure in a way, maybe from the media point of view, or just in the conversation around currency and blockchain technology in general, that, everything that has to happen next year. It has to happen in 2 years. And part of that discussion, switching gears a little bit, has also been about, this move towards blockchain technology on government scales. Conversations about CBDCs, and certainly, things like Libra sort of entering into the conversation and changing the space. So, particularly since the coronavirus has, taken hold of our world, there's been a little bit more conversation about how, we really need to move toward a cashless society, and that therefore CBDCs could be sort of an imminent part of the future. So David, I want to ask you about that narrative a little bit. Do you think that there's a real case for CBDCs right now, especially because of the coronavirus?
So the first thing to say about it is that CBDCs are not good news for Bitcoin, or for crypto in general.
Why is that?
Quite a few central bankers have said directly, of course, there's no reason to base it on a distributed ledger. Because the thing that makes something a central bank cash is having it issued by the central bank. Because these days, the way money is actually created is loans by commercial banks. That's how dollars are actually printed now, for the most part. The Fed or whatever pumping out stimulus dollars, money printer going brr, is actually quite minor compared to the way money is actually created in the world, which is business loans. So CBDCs, I think, are much more a matter of the politics of who gets to do the banking between the commercial banks and the central banks. And it's all quite complicated. China is pushing forward with its CBDC pilot scheme. Nobody knows exactly how big this actually is. They appear to have been provoked to it. In their own words, they said in July that they were being provoked to push it into action because they perceived Libra as a threat. And so I don't know if the scheme actually has much beyond that. Central banks have been talking about CBDCs ever since Bitcoin came along, and blockchains and so on, because CBDCs have to look to the future, of course. They have to look at things that might not happen for years, but plan for them just in case, because the whole point of a central bank is not to be surprised, and to keep things stable and steady. So CBDCs, I think the main thing they're being used for is a big stick to wave at the commercial banks saying, get your payment systems in order so that we don't have to go to central bank versions.
Mm.
That's certainly the drive in Europe. So I'm still not convinced completely of the use case for central bank digital currencies at all. But
Mhm.
It's very much a great idea that's not really seeing a solid use case. And I think that the more they're pushed, the more the central bank will have to turn into a commercial bank to deal with having hundreds of thousands of customers instead of, say, 10 or so customers that they know really well. And
Mhm.
it's a completely different paradigm. A lot of it seems like a great idea that is looking for a use case. So yeah, but I can say that there's no reason to think it's good news for cryptocurrency, except that there's a lot of wishful thinking in the space that it will be. But I'm not seeing a solid base for that.
Yeah,
Zach, oh, go ahead, Joe.
no, I was just going
Yes,
to
I
agree.
want to know about what Bison Trails thinks, because you're on the Libra Association, aren't you?
Yeah, we are. So I definitely would push back against this idea that it's not good for crypto, and I would very specifically point out that CBDCs can represent a very large scale deployment of crypto technology specifically, which is something that the crypto and blockchain space is looking to see in action. So whether it's very good for Bitcoin or not, I sort of agree with you. Like I'm not a fortune teller. I can't tell the future. I have no idea. But seeing any central bank use crypto technology and potentially distributed ledger to engage in this kind of activity is very good for the technology space from a use case perspective, from usability perspective, from getting the technology out in the world being used responsibly in a very real way. So we feel that way. It's also one of the reasons why we were, very excited about Libra in particular, since, Rachel, you mentioned it, and David, you mentioned it as well. I'll touch on it quickly. One of the biggest driving forces for Bison Trails as an infrastructure company to join Libra was about the scale of distribution. If you look at the Libra Association members and the existing association members and their ability to distribute this technology and this asset around the world, it really trumps the scale and size of any crypto or blockchain technology that exists currently. And that's why it's very exciting for us, because the most important thing about this tech is getting it at scale and getting it in the hands of people. And that's a hard thing to do. And a lot of David, what you were saying earlier about the current ecosystem being a lot of traders trading back and forth, like there's some truth to that for sure. And we've been slowly but surely growing the pie. And I think both CBDCs and projects like Libra represent opportunities for inflection points in the ecosystem from a usage perspective.
And Zach, I want to also pass the mic to you because I think we got a little congestion there. You were agreeing with David. Was that what you were doing?
Yeah, no, it's all about distribution. So I don't think take the technology out of it and just think about the use case. I agree with Joe that it would be very bullish for the technology sector, but just think about the practical use case of this, what it means for consumers, and whether or not it's viable. And I'll come at it from a US point of view. I think there's an incredibly low likelihood that the central bank in the US or the Federal Reserve ever want to get into the business of holding accounts for retail individuals. There's a tried and true history of facilitating the banking sector, facilitating private companies delivering financial services, and the banking lobby is very well capitalized and established here. So I think the odds of something like that happening, unless we have a big uprising after COVID and switch to like a socialist government or something, which I also don't think is likely, it's just not going to happen. So but that is why it's bullish for crypto, because this distribution that either Libra or just stablecoins that we already have today create specifically for dollars, and the fact that that's not going to get taken away by central banks in the US saying, no, 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 we just want to own those accounts, is what creates a very bullish opportunity for crypto. If I'm in Argentina right now and we have around 20 people on the team at BlockFi in Argentina, as a retail individual, if I want to get dollars, in the last couple months, my ability to access dollars in my bank account has been severely restricted. So you get pushed to the black market, which is all paper money. Stable coins basically accomplish the same objective as what we think of when we think of CBDCs, except they already exist and they're not going to be as restricted in terms of who can access them. That is huge. And then if everyone who accesses a stable coin is doing it on a provider that has, you know, a 99% likelihood of also having Bitcoin available there, you're just bringing the money that much closer to the crypto ecosystem, and you're solving a bit of the, you know, pain point that David mentioned earlier about fiat on and off ramps. So I think for a lot of people that own Bitcoin over the next couple of years, they're not going to come in saying, I want to own Bitcoin, and that's their first step into the crypto ecosystem. I think their first step into the crypto ecosystem is, oh, I can hold digital dollars and earn interest on them or do something else with them on these new crypto platforms. And then they're just going to do that for a while. And maybe one day a percentage of them will also buy some Bitcoin because they're already so close to it and it's so much easier than it was before.
Marc, do you have anything to add to that before we go to questions from the audience?
Yeah, I mean, just kind of a 30-second initial gut reaction is that large governments, banks, and traditional financial institutions are very interested in this space, I think primarily for PR reasons. And I think the tech companies seem more interested in actually doing things. So I think it's not a surprise that like Facebook and Square, I would call out as, you know, two tech companies that I think will actually move pretty quickly in this space and, you know, see the potential. I think a lot of the other folks who are doing it are very much more doing it for PR reasons and somewhat as a hedge to show, hey, you know, your large bank or large asset manager is more hip than you thought. And I think the real interesting question will be where China comes out, because, you know, about 5-10 years ago, they started this huge AI push, which had billions and billions of dollars spent. And I think it's kind of a question how effective that was. And I think to some degree, China's crypto push is similar. And to be fair, there were certain improvements in AI that came out of China. So I think that's the kind of maybe one interesting government, large financial institution, bank sort of story to watch, is because many times when the Chinese say they'll do something, they do it. But generally speaking, I think it's more the tech companies that are driving this that'll be interesting to watch.
Absolutely. And on that note, I'd like to take a few questions from the audience. So we're running up to the edge of our time here, but guys on the panel, if it's okay for you to stay about 5 minutes over, that would be lovely. Of course, if you have to go, no problem, but let's jump into some of these questions while we have the time. So we have a question from Dave. And Dave asks, is it really the best selling point for stablecoins that people can evade capital controls? That doesn't sound like a good long-term basis for a new industry.
I think there's a lot of other stuff too. So you can just on BlockFi's platform, you can earn 8.6% annual interest on stablecoins, which is you know, many multiple times better than what any developed economy banks are currently offering. But I also don't think you should underestimate the value of that use case. There are around a handful of historic examples of countries that have dollarized, basically driven by the people of that economy. And I think that you might see a lot more of those. So when people said, like, you know, in the early days of cryptocurrency and still to this day, that Bitcoin's going to overtake the dollar, my instinctive reaction to that was always, well, you know, Bitcoin should like pick on some currencies of its own size first. And I actually think that you're not going to see Bitcoin replace other currencies, but you are going to see the dollar really start to poke at some of the, excuse my French, shitty currencies that exist in the world. And that's going to be partially enabled by the digital distribution that you know, occurs as a result of what's happening in the crypto ecosystem. And it's probably not that big of a use case from a pure market cap increase perspective, because those economies aren't that big, right? Like an economy that's going to self-dollarize because their currency sucks, it's not that big of an economy. But if that story starts to get out there and that starts to happen, you're going to see folks who have a conscience in developed economies that do control a lot of capital start to support this ecosystem that much more. And I think that's a very realistic scenario that we could be looking at in the foreseeable future.
Okay, thank you, Zach. Anybody else want to address that before we move on? Okay, so another question from Dave, and I love this question. So if Bitcoin is crypto 1.0, what's the version 3.0 that cracks the mass market? And what would that look like?
Still Bitcoin.
What does it look like?
No, that was a joke.
It's exactly the same.
No, I think, and again, like fortune teller, caveat about not being a fortune teller. Bitcoin could be crypto 1.0. I think, like any healthy ecosystem, you have the early sort of mechanisms that are driving forces, Bitcoin being one of them. And you could even say things like smart contracting platforms like Ethereum are crypto 2.0 in a sense that, I'm not trying to name anything here, in the sense that like they took some of the fundamentals and made improvements and made some changes and created different use cases. And we're starting to see more and more new protocols being built, new blockchains being built, new systems being built, including things like, lending platforms and new smart contracting platforms and new stable coins. And so who knows what 3.0 will actually be, but I think what I'm trying to get at is that it's a progression, and that it's not, nothing shifts and it's not like Bitcoin goes away and something replaces it. It's more that the ecosystem continues to grow and build out on top of itself.
And there were many projects before Bitcoin, so I think it's unfair to say Bitcoin is crypto 1.0. There was e-gold and many different examples. So in some ways, I think Bitcoin is a later iteration of kind of monetizing the internet. And I guess a second thought there is, in my view, this is sort of like Bitcoin's Facebook Series B moment. It has clearly some adoption. It's clearly like the most interesting platform in a new space. But it's nowhere near the potential it could have. And there are a lot of risks to get to that potential. There are a lot of questions, a lot of what if, but there's also a lot of proven momentum around it and a community around it. And so in many ways, I think it's almost the wrong question to be like, oh, what's next? It'd be like looking at the social network framework and saying, oh, okay, Facebook's already doing a Series B. It's already a big company. What's the next Facebook? But not realizing that this is going to become a 300 or 500 billion market cap company. So I would not try to predict the next Bitcoin. I would more do the analysis on, can Bitcoin become much bigger given the traction it has? Because if the answer is yes, and it's going to work, it's going to be much bigger than today. But the fundamental question is, can it be that or not? So I kind of keep the attention there.
Would that make MySpace e-gold?
Yeah, exactly.
Exactly. So Nikki asks, following the halving, one word from each person, please. But I want to extend that a little bit more to maybe a few sentences from each person. Bullish, bearish, or fence sitting? So David, can we start with you?
So I've already answered on this one on the blog. I don't think the halving makes much difference, except it'll knock out a pile of miners. The price of Bitcoin, the number that you see on the charts, has a lot more to do with BitMEX margin traders trying to kill each other than it does with how interested people are in actual BTC, which is why the price has done such weird things over the last year or so without actual retail volume happening at the same time. I think that the price movements can almost entirely be explained by BitMEX traders trying to kill each other. So I would say that will continue after the halving. It will hit miners quite hard. We're fairly sure that a lot of small Bitcoin miners are going to be knocked out entirely. If you don't have absolutely the latest rigs, then you're buggered. So that's going to be a problem. it's hard to hop from coin to coin. You know, Bitmain still has its inventory of Bitcoin Cash it can't sell, so you can't just hop to another SHA-256 coin with the mining capacity. Bitcoin SV is even worse than low volume. So, I mean, after Bitcoin Cash had its halving in April, because it's a few blocks ahead, not much happened. The price dropped by about $40, and that was about it. But the trouble is that the Bitcoin is a small and thin market that's very easily manipulated. If there's money to be made, say, burning margin traders, you can make a lot more money burning the margin traders than it will cost to buy us the price. It's a really tricky one. So I cannot see that the halving will be magical, basically. People who talk about the halving as if it's going to be magical, I put those in the box marked narrative, where people will say anything and its opposite, trying to convince people that there is actually good news for Bitcoin.
Mm-hmm. Okay, Zach, what are your thoughts? Bullish, what were these
I fully
options?
expect disagreement, by the way.
Yeah, I've got to jump right after I say this, but I normally don't make price predictions. I'm like, my position is very clear that I'm long-term bullish. We do have a internal like competition for fun at BlockFi, where all the employees at the company submit their Bitcoin price guess for the end of the month, and whoever's like the closest gets $100. I submitted mine last Friday, and it was 12,515. You have to go like a little bit above round numbers because it's Price is Right style rules. So I'm officially predicting a 50% price increase from where we are today by the end of this month. I think David's right that the halving doesn't necessarily matter that much in terms of fundamentals, but it creates this phenomenal marketing opportunity for the space. Everyone's going to be hearing about Bitcoin. It's going to be all over the press. It already is now. And next week, when the actual halving occurs, it's going to go smoothly. Everything's going to be fine. People are going to go, oh, wow, Bitcoin did this thing. My friends who are normal are pinging me saying like, oh, what about Bitcoin now? So it's a marketing event, but that's really important. So I'm super bullish. 50% up by the end of this month. And thanks for having me. I got to run.
Yeah, absolutely. Thank you so much. So
I can see it could be a marketing event.
Yeah, a marketing event. I love how Zach called people who aren't interested in Bitcoin his normal friends. Amazing. Joe, yeah, what are your thoughts?
Yeah, so small caveat, I mine Bitcoin. So I have a good amount of experience understanding price movements around mining. I've been doing it for a long time. Personally, I mine Bitcoin personally, I should say. There's two things I'm sure of. One is that I am bullish on continued volatility in Bitcoin price. Whether that's up or down, kind of to me is irrelevant. Like, similar to Zach, I'm very publicly long Bitcoin and crypto in general. What I will say, and this is specific to the halving, is that compared to previous halvings where folks are looking at history and saying, look at the previous halving, it had like serious price adjustments, and most of those were upwards. The Bitcoin price has been mostly tied to the activity in the network, and right now a lot of the activity is this margin trading in places like BitMEX. So it is very possible that the price, it's already priced in, or that the trading activity is dominating any kind of mining activity that would be dictating the price. We don't actually know, and I don't actually know, and I guess my point is that I don't really care all that much. And I'm curious to see what will happen, but in previous halvings, there wasn't the infrastructure around trading that we have today, and so there wasn't the opportunity for margin trading on BitMEX to dictate the price. Barely the last halving. So it's just a different world, and we're seeing that progress. And to me, that's what's actually a good thing is that we are seeing the markets sort of adjust to what platforms exist, the trading activity that exists, the mining activity that exists, the purchasing activity that exists, and that's what's really cool. So that being said, if I had to say anything, I would say bullish.
Thank you, Joe. So Marc, what about you?
Yeah, sure. I think, if you look at the last halving in 2016 and then the year that followed, it was also kind of the rise of Ethereum and at least a lot of the excitement around it, the community, the building, and those two things were so clearly connected and kind of moved prices together then in the subsequent year of 2017. So I think, in terms of the halving, it in itself, could be definitely can be a positive narrative, a lot of press. It can also be a negative narrative. Nothing happens during the halving. Oh, I thought that was supposed to be the moment. Should we all get out of this? So I think, there certainly will be a narrative effect, a PR effect, and that could go either way, in my opinion. I think, more important are other confounding variables that could come in around use cases, around developments, around tech, and things like that. And the happening could end up, if there is those things and there is an increase in demand, then of course a cutback in supply can cause a very noticeable change. But I guess I'm a bit more demand focused on it in terms of, the use case, the activity, and a lot of the day-to-day trading. We see this too, right? It's what's going on BitMEX and some of the exchanges that are tied to the index that BitMEX uses, and it's very true that drives a lot of the volatility. But I think in terms of like longer term price trend up, that's not simply done. If you believe that, then it would vacillate between 0 and 1,000. But I do think you find these ranges, you find these support levels, and there is a base community as well to be taken into account as you think about base pricing.
Absolutely. Well, we are officially out of time, and I want to thank all of you so much, our attendees, for coming in and being here with us today, as well as you, Mark, Joe, and David, and Zach, wherever you are in the world. Thank you so much. So everyone who's still here, that's all from me and from our panelists today. We had Marc Bhargava from Tagomi, Joe Lallouz from Bison Trails, and David Gerard, author of Attack of the 50-Foot Blockchain. Attendees, thank you so much for sending in your questions and tuning in to watch this webinar. If you'd like to meet us in person, we'll be having the Finance Magnates London Summit on the 17th and 18th of November at Battersea Evolution, and you can find all of the details for this event on our website. I hope you all have a wonderful day. I really highly recommend you check out the work of they're really involved in some projects and different things. So see you all next time. Stay healthy, stay well, and thank you.
Thanks so much. Take care, everyone.
Bye.